All right, so this is Trader's Basic Toolkit Lesson 3. Previously talked about in Lesson 1, identifying levels. There is, drop-based rally, rally-based rally, rally-based drop, drop-based drop. We talked about identifying those, how you can draw them, the range of candles. Got into Lesson 2, which was multiple time frame analysis and choosing what your multiple time frames are. So if you're day trading on a smaller time frame or day trading on maybe a slightly bigger time frame. There's some notes in there as well as for what you would consider, I didn't get deeply into it at all, but swing trading, or the fact that some people won't even trade anything less than a 240-minute chart or a daily candle. Some people just trade on those candles, or daily, weekly, and monthly. But for mostly what we talk about day trading. So if you catch the last lesson, there is an explanation in there. Today could be a shorter lesson. It's more not so, doesn't get so technical into the candles and the trends and whatnot, but talking about technical levels. ATR is average true range, and news, and how do these things either affect price or how you should take them into consideration. So usually in the morning, first thing, and I'm doing this with a little more of a lean toward what I tend to do in the morning. To each his own. You need to work a lot of these things out for yourself. Okay. In the morning, what I like to do is, I'm going to go first here, and I will touch on all these things. Indicators, remove that, apply that. Okay. Okay, so if you want to get your prior days high, low, and close, open, high, and low, excuse me, go right into here, go into indicators. You're going to go down to P for previous day. This is how you find it on NinjaTrader. Going to hit the add button on that. I'm going to go in here and make these a little more obvious. So low, high, I like my high to be delineated by bright color like that. Okay, or actually by green to be more specific is what I like. And as far as how you like to see the lines, it's up to you. So there's the high, there's the low, red, high, and low. And open, I'm going to put a open on this deep sky blue. And I'm also going to do the same thing for the close so that I know that's for me. Do it however you like. Deep sky blue. Cool. Apply, done. Okay. So here you go. You're day trading, getting yourself set up for your trades. And you want to know where your previous day high, low, open, and close are. Okay. Now I'm going to switch this to a 30 because if you had this on a 1 or 5 minute, you wouldn't even see these down here because we had such a big range on Friday. Okay. So here's your open on Friday right here, this dotted blue line. Here's your low on Friday. And then up here, they're pretty much stacked on top of each other, is your high and your close on Friday. So likely most relevant today is going to be what was your high on Friday, right? So you got to imagine you're in here probably looking at a 1 or a 5 minute chart at somewhere around like maybe 8:39 in the morning because you just woke up. Okay, you woke up and you're doing some analysis. So we're going to say you're doing your analysis at like 8:30. You're on a 1 minute chart. And this is telling you right here, your high, for me, indicated by a green line. Your high from yesterday was there, and from Friday was there, and your close from Friday was there. So these are technical levels. Price has a tendency to come back near those levels. And if we're in an uptrend, maybe continue to move up. Okay. In this case, what did happen here? Price did come down, came down, started to come near those technical levels and just moved back up and hasn't come back since. So are these technical levels still relevant? Well, yeah, actually, I think so, especially because they're lining up with 5-minute levels that you could potentially get long off of. So that's how you get your high and low for the session, your high and low open and close for the previous session. Okay. The close for the previous session is also relevant to me. I myself like to use the previous days or the previous sessions, regular trading hours, which is what RTH is. Okay. Regular trading hours. Let me just clean this up. Get this out of here. So regular trading hours. If you look here, this is a 1-minute chart. This right here is where price closed. There's a gap in this chart. There's a gap in the chart because this is where your regular open in New York is going to be 9:30 to 4 p.m. Right? So this gap in the chart is the gap between where price closed on Friday and where price opened and has been moving around since the morning session. So that gap is everything between that wick and that wick right there. Okay, that wick right there. So that's a gap. Okay. That's relevant for me based on my back testing. I want to know, and this is a lot based on the back testing I've done. My back testing has been done on trading, on using a daily chart. Give this a second. It needs to move from my other screen. So you can see this. This is a NASDAQ chart right here. But I like to know, this is the equivalent to an RTH on NinjaTrader. The difference is on TradeStation, this chart will tell you, if you're looking at a daily, where the open and close was on the previous day's session with regards to a daily. On Ninja, it won't. If you try to do that on a daily chart, it actually won't give it to you. Okay. So here's the ES. This, you can see the wick on the candle as well, right? So here's the previous day. Here's the wick right there. I'm pointing to the screen. You obviously can't see that. Okay. That's my high from the previous session. Just regular trading hours. Okay. That's where regular trading hours, where you're going to have the most volume, where you're going to have the most traders participating in the day, right? So this chart right here is that whole Friday right there. So for me, I've done some back testing to see when price is, for example, outside gap up, how does price react based on this chart? Okay. When price is inside gap up, how does price react? Okay. So inside, when I say inside and outside, what I'm talking about is, here's the whole range. You can see it wick to wick. If price opens outside of the previous day's range, how does price tend to react? And it's also going to depend on, is it an uptrend? Is it a downtrend? So, also, how does price react when it's an inside gap up or down? So what's an inside gap up or down? Here's an example right here. Okay. Here's the preview. Here's whatever this is, the 21st, and this is the 22nd. So on the 21st, this was our range. Okay. Price opened inside of that range. So there's a red candle. So that means price opened right there at the top of the red candle, right? If you look to the left of the previous day, it's inside that range. So, what is the tendency of price when it opens inside the range? What does price tend to do? It tends to fill the gap. So the gap is here, right? Because that's the previous day's close. And it did do that. Price opened. It did go down and fill that gap. Now you got to go, this is a daily chart. You got to go down to a minute time frame to see, did it come down and fill the gap first and then go up? Or did it go up first and then come down and fill the gap? That you'll have to dig in deeper into your charts and find out. My point of showing this to you is just that price has certain tendencies and movements based on whether it's inside or outside gap up or down. So that does fall into this whole idea of technical levels and technical spots on the chart. Let me get this off here for now. It's going to take a second to move because it's going to freeze halfway over to the other screen. So because I've done most of my trading in the past, I trade a lot more on Ninja now, but most of my trading in the past on TradeStation, I have some tendencies and habits that I've tried to pull over to Ninja. And I finally discovered today that the RTH chart, even though I know that the RTH chart is the regular trading hours chart on Ninja, which is the same as what's referred to as the .D on TradeStation, that it won't show me this gap on a daily chart. It'll show me on every other 5-minute, 10-minute, 30-minute, 240-minute. It'll show me this gap, but it won't show me this gap on a daily chart. If I switch that to a daily real quick, you'll see exactly what I'm talking about. See that gray box? That gray box right there represents the gap. But according to this chart, it already filled in that gap. And that's not the case, because if you go to a 5-minute or a 1-minute chart, you're going to see that in the regular trading hours from the 9:30 open until now, price has not come down and filled in this gap here. Cool. Okay, moving on. Multiple time frame. Where are we? Technical analysis. ATR. Why is the ATR relevant? I'm going to come back to ATR in a second, because I have these lines on the screen. I want to show you what I do with these lines here. Okay. I'm going to get this out of here. I know there's a gap there. Okay. And actually, I'll do this to signify that gap. I'm just going to throw this down here. I use arrows. I like to plot my gaps as well. Okay. So I like to know where the overnight high and the overnight low are. The overnight high and low. Overnight high and low, you won't get on an RTH chart. So sorry to make this a little bit confusing. I don't trade on the RTH chart. I just look at the RTH chart for reference. So sorry, I should have been a little more clear about that before I started throwing all these lines on the screen. I just use the RTH chart for reference for what I think price movement might do based on my research. Okay, so when I want to know where the overnight high and low are, all I need is the session break from the previous day. Okay, that's what this vertical line is. This is automatic on the charts. It's a session break. So I know where Friday ended over here. Okay, I always plot lines for the overnight high and low. There's my overnight. It's just a template. Well, I'm gonna have one for the high, one for the low, and then I'm gonna have and then I'll have one more for the gap. And you can use any color you want. I'm going to use, let's say, some kind of, whatever that is, medium orchard. Okay, so the overnight low is all the trading that happened when the futures market reopened, in this case, on Sunday night. Okay, so this right here is the lowest point it went on Sunday night. And then I want to know before the 9:30, what was the highest it went before price opened at 9:30? And the answer is 9:35, 9:34. And so here's your 9:30 candle right here. So what's the highest price? Highest price went in the overnight is right there. Okay. This purple line is my gap. Purple line is going to be my gap on the daily. Okay. Now I'm going to pull that from the RTH chart, which is this gap right here. Okay. So on this chart, that was the close. You can use a 1-minute chart. You can use a 5. I'm going to use a 1-minute, let's say, to be the most precise. So this candle right here, 40.51, is the gap. Okay, so then I'll go back to my my 24-hour chart, and we said it's 8:30 in the morning. We're doing our research before the market opens. So let's say that's 8:30. Okay, and 40.51 is my gap. Okay. Now there's a bunch of other lines on the screen. What are they? This right here is the prior day open, high, low, close. Okay. Prior day open, high, low, close. So you could argue that this blue line is your close, and that this gap filling line right here that line should be there. If I'm telling you that this purple line is the gap that didn't fill from Friday, then the system or the platform is telling me that that gap is actually there. Okay. It doesn't matter, if you're within a point or something. What's relevant is that you're consistent in how you do this. So if you just want to use what the platform's indicator gives you, and you never have to worry about any discrepancy, then all of the back testing you do will be based on what the indicator on your platform gives you all the time. And then your information will be consistent with that. And I didn't discuss, I don't have back testing on the lesson plan, I think, until actually next week, just to talk about back testing. Yeah, it's actually next week. So the point is, when you're back testing, you just want consistent parameters. All right. So for the sake of this conversation, high, low, I know what my high and my low are. Now at 8:30 in the morning, by the way, my overnight high is still only here. All right. So as you're getting closer to the open, we're moving closer, we're moving closer, we're moving closer. Here's 9 o'clock. Here is, boom, here's 9:30. There's 9:30. Okay. Then I'm just going to adjust this because I still want to know what is my overnight high. All right. I want to know my overnight high and low because I also know that when price gets near these levels, we have reactions, where, what just the trend on smaller time frame, the higher time frame, how do they react? But just knowing where these are for now is relevant. Okay. As you can see, when we got near the overnight high, price started to push back. Now there's a strategy I use for, or the trades that I take based on, it's called a trap. Okay. So a lot of traders will think that when price breaks through that overnight high, it's going to start running. Now the parameters are such that is the case today, right? But that trap is also usually accompanied by a pullback, and I won't get into the details of it, but that trap is a lot of times accompanied by a pullback. Let's say where price will break out of here, come down, come here, come up, break out, and then come back to the first 5-minute level that's inside this range. And by the range, I'm talking about this area between these two blue lines, price between the overnight high and low. Okay. I know that price has a tendency to come back to one of two places. And it's going to be based on your trend and where you are in the bigger time frame, what your 1 minute is doing compared to your 5 minute, compared to your 30-minute, where are you on the daily. There's a lot of other factors, and I can't go through all of them right now, but I know that price will either come back to a 5-minute level inside of this range. Generally it does a lot. Okay. So those 5-minute levels are already marked. What else do they line up with? They line up with the previous day's close and the previous day's high. Previous day in this case being Friday. Today's Monday. Or I know that if price is on the move, on the run, like it is today, because we're outside gap up again, and we're still running up, I also know that price will have a tendency to maybe just tap this overnight high and keep going from there. So this gives you two potential trades right now, right? One is maybe I take a crack at that overnight high, which does line up with a 1-minute rally-based rally. Okay. So not only do you have the technical level of the overnight high, but you also have a demand level there. And then my next crack, if that doesn't work, is going to be, as long as my 5 minute stays in an uptrend, my next crack at that is going to be my next crack at a long will be down here in an area where not only do I have 5 minute levels, but I also have the previous day's high and close. All right. Now, again, this is all I'm setting up my strategy prior to prior to price arriving to places of interest. Is this potentially, what is this on a 30-minute chart? We haven't looked at that yet because that's not the point of this lesson, but on a 30-minute chart, is anything here that looks like a level I like? Well, not overly excited about anything here, except maybe this what looks like a drop-based rally and overlapping wicks. But that was a reaction to this pivot low here, and not sure where I stand on that yet. But again, not the scope of this lesson. Okay. What you may have here, and you might want to pay attention to, is price came down, came up, and if you remember our trend discussion, if price breaks this pivot low here on this 1 minute time frame, price breaks this pivot low here, then your 1 minute is in a downtrend. And as long as you can find a way in to get short before price comes down and maybe hits one of these technical levels or one of these 5 minute demand levels, you're going to be good to go. Okay, so I'm going to leave that for the moment so I don't keep getting sidetracked on you. All right, so overnight high and low, talked about overnight high and low, talked about previous days high, low, and close. And just a reminder on these two lines here, there should be two more lines, right? Because we have you can actually see right here up in the top left corner of the screen, prior day OHLC. Prior days open, high, low, and close. So the other two lines that match that, and if you want to use different colors that, make it easier for you to see or catch that on your eye, go ahead, use different colors. But if you go all the way down here, right here, these are your other two indicator lines that match this indicator right here. So this is the low of the previous session, that's Friday, and this is the open. So open, low. Open is the blue line, low is the red line, high is the green line, and blue is the close line. The close line. Okay, on different, on different days, let's just do this real quick. We're on a 1 minute chart, but on days where the range was not so massive, you will be able to see those lines more easily. Let's see if it plots previous days. I don't use this indicator a lot, so I'm not sure. Yes, it does. It's plotting on here, right? So you can see that, for example, on maybe it was Wednesday. So Wednesday, if you had your 1 minute screen scrunched down in the morning and you were at 8:30 in the morning doing your analysis, let's see if you'd be able to see it. So if I'm doing my analysis at 8:30 in the morning on what I believe was last Wednesday, and I would only actually see part of the lines, right? That would be the let's call it the Tuesday's low. That would be the Tuesday's close up there. That would be Tuesday's open. And then you get up here and that would be Tuesday's high. Okay. All right, so technical levels. Those are what are referred to as technical levels. Going into, at the moment, and maybe I'll do this in a future lesson, but at the moment, more detail as to those technical levels. is maybe something I can get into, and I'll make a note of that. But for now, when we're saying overnight high, low, close, overnight high, low, open, and close. I'm just doing this so you guys understand what that stuff is, where to find it, how to get it, how to look for it manually, how to plug it into your chart based on indicators that are available. So so now you know. All right, we did open, high, low, close. I did overnight high and low because I like to use overnight high and low. They're relevant for me for some of the strategies that I've learned. Average true range and VWAP. What's VWAP? VWAP is volume weighted average price. This is how the exchange determines the settlement price. So I haven't used the word settlement price here. The settlement price is an average of, and you want more detail on this, go to Wiki or Investopedia, how they determine it, but it is a formula. It's not an overly complicated formula, but it's a formula that takes the volume of the previous time period, because that time period may be maybe smaller, maybe bigger, but with regards to the daily, because they're getting the whole previous session. Okay, they're going to calculate that between 4:15 and 5:15 p.m. Eastern. So the close at 4 p.m. of the regular session, for example, the regular New York session closes at 4 p.m., but you'll still see your chart moving until 4:15. The close is not the same as settlement price. So there's some semantics there. Someone says settlement price, they should be referring to settlement price as the exchange refers to settlement price, but they could be referring to the previous close. So I just want to point that out so everyone's aware of what that is. So the settlement price is going to be a price where price may have closed at, let's say, 40.65, but settlement price may be 40.66, maybe 40.63. So it's going to come down to, again, what indicators are you using, or how are you manually determining these indicators. As long as you're consistent when you do your back testing, and you know what you mean when you put those things on your chart, or what you mean when you say them, then you're good and consistent. You just also want to know maybe what that parlance might be in different circles, or standardized across the board. And that's relevant in trading. It's relevant in anything, right? So for me, the overnight high is just the highest price, the highest price went to before the 9 a.m. open. Sorry, the 9:30 a.m. open. Okay, and that's what my blue line represents there. So settlement price, look that up, VWAP. You don't need to know it in depth for trading. Okay, you just need to know it to be aware of it. The ATR is the average true range. Okay, why do you want to know the average true range? I mean, there's a couple of reasons. I'd say the primary reason you want to know the average true range is because you want to know, when you get into a trade, based on where you are in the high or low, you want to know the likelihood of how many points you're going to take on that trade. If you think that you're going to trade the ES every day and get 110 points, that you're going to find a point where price is going to hit and it's going to move 110 points in the ES, you might be mistaken. Let's go to a daily chart real quick here, and we'll put the ATR on and see what it is. Now that ATR is going to change from day to day. Going here, indicators, ATR, hit the add button, hit the apply button, or the OK button, either way. And average true range is going to come up on the bottom of your screen. Now, your average true range on a daily chart, clearly it has, let's go over here for a second. Right, what's your average true range on February 20th? I mean, look, price didn't move very far, so your average true range on that day was coming in around 60 points. Okay, whereas the day after that, sorry, what I was saying, what I was thinking did not translate. Your average true range, you can see here. Okay, if you look at your lows and your highs are coming in somewhere around 60, your highs coming in somewhere around 100. And if you took an average of all this, clearly average true range. Okay, so based on this price movement, you can see prices moving, 20 points a day. Sometimes price does move 100 points a day, 30 points a day. If you take this swing from here to here, 66 up to 102, let's call it, that's 40 points. Here's a swing, 40 points. Okay, here to here, 78 to like 113, so we'll call it 78 to 108, 30 points. Point is the ES moving a couple hundred points a day or 100 points a day? Does it, tend to move in a range of about 30 points a day or 300 points a day? Because if you're getting in a trade and you think you're going to take it 300 points a day on the ES, you're mistaken. Does the ES sometimes move 100 points? Yeah, in a day, sure. Here's 4207 down to 3968. Well, that was a significant move, okay? But that doesn't happen often. So 42 down to 40, let's call it. And it went further than that. So it was over a 200-point move. But in general, like, look at these candles. These are daily candles. In look how many days price was basing in this range from 86 to, let's take it here. Let's see, 3809 to 3900. So about 100, kicking back about 100 in this range for a couple of days, right? 50 to 100 points a day. If you're just looking to get 10 points, you're in the right mindset, and you have the right expectation, let's say. Okay. So trying to get 10 points on the ES on a trade in a day is not at all crazy. So that's average true range. Overnight high and low, did that. The London sessions. I like for myself, I like to know what went on in the London session. Okay, the London session. London is 6 hours ahead of New York, and London opens at 8 a.m. London Stock Exchange market hours. Let me just check that real quick. I'm always looking around the 3:30, 4 o'clock time frame. So London opens 8 a.m. and they're 6 hours ahead of New York. So 8 a.m. in New York. Sorry, 8 a.m. in London puts you at 2:30 in the morning in New York, right? Oh, sorry, got to go backwards. Here we go. 5-minute chart. Okay, so this is London opens, it's 8 a.m. and around 2:30 in the morning is where, because we're sleeping, because they're hours ahead of us. So 8 a.m. open right here, this area, about 2 in the morning. I want to know what London's doing when London opened. So, London kept taking whatever we had going on Friday, They brought it back down. We get in here. So downtrend in the morning. And why is London relevant for me? Because everything between here and here is going to be a lot lower volume. Okay. Everything between here, this market is open, and that's not to say you can't be trading in here and somehow, you take a trade here from 40.44 and you take it up here to 64, 20 points. That's great. When I'm looking at levels and I'm looking for patterns, I will ignore everything between New York closing and London opening. That's just me. London is clearly a big market, is a big financial center. It's a big market. That's why I want to pay attention to it. And they're trading closer in time because I'm trading US indexes. So if London, one of the bigger, New York, London, Tokyo, one of the bigger markets in the world, is going to be close to trading time. They're going to be wrapping it up while we're in the middle of our day. I want to know what's going on in London. So how I use that is another story, but I think the most relevant piece for you guys who are newer to trading is probably to ignore. I shouldn't say ignore. Don't give a lot of weight to this time between London, before London opens, and when New York closed. It is completely tradable, but if you're new to the game, I'd say just leave it alone. If you go in here and you see a relevant level in here, let's say before New York opens, and you know where you are in relation to, here's a good example. Here's a drop base rally and a rally base rally with a gap out of here. And this happened over here, as opposed to somewhere over here. I like this better. I like this level better because I know that this was during the London session, the first part of the London session. Okay. And if you happen to, let's just see real quick. Here's the drop base rally and the rally base rally right in here. And there was a gap in there. If you tried to trade at 6 in the morning, you didn't work out. Okay. That's not to say it can't work out. Here's a drop base rally. Not every level you put on your chart is going to hold. Okay. Rally base rally right here. And I know at this point, because I drew these on, I know we didn't get back here yet. So this whole area down here, at the moment, I like. It depends on what price decides to do here. And again, that's outside the scope of this lesson. But you can see, because I talked about, I like marking the overnight high and low. We're getting a reaction to the overnight high, which also happens to have a 1-minute level in it. However, you did get a lower low and a lower high here now on your 1-minute chart. So, you might be able to catch a couple of points off here. There is a possibility that this is going to pull away from here. But again, we don't know outside the scope of this lesson. So London hours, OHL indicator on Ninja, we did that already. News, source of news. Definitely one you want to pay. You can use anything for this. I like Forex Factory, even though I don't trade Forex. I'm going to bring it onto the screen in a second. I just got it on my other screen here. So forexfactory.com is going to give you what you need to know, give you your dates and times for news. Okay. Red folders are your relevant ones when they come up as red folders. Okay. You can set, just make sure you check your settings on dates and times. I'm usually looking at this on my phone. I almost never look at it on my laptop, even though I'm sitting on my laptop. Just make sure your settings, and it looks like the settings will come up in different spots on mobile time options. So, just check your time zones and make sure that the times you're seeing on the chart are the appropriate times for when this news is coming out. So I know I have it actually set on my phone. I'm just going to go to my phone real quick. Give me a second. I have it set on my phone for New York hours. I do it when it comes to trading. When I started trading futures, I was in New York, and I'm from New York. So I do everything on New York hours. So yeah, I have this set to, okay, and it actually has the current time right there. So this is, even though I'm in Arizona right now, this is set to New York hours. So if you look at today, nothing relevant for the US, okay? Unless you're trading the Aussie dollar futures, then you're going to want to make note of that. But that's 10:30 p.m. You look tomorrow, 8 a.m., red folder, USD, okay? US dollar, because this is a Forex website, US dollar. There's going to be Fed Chair Powell testifies. So 8 a.m. is news. This red folder, Australian dollar, not concerned about that. Okay. Wednesday, we got ADP non-farm payroll, red folder, relevant. So you'll likely see some significant price movement in the chart. 6:15 a.m. Eastern, 8 a.m. Eastern. Bank of Canada. So unless you're trading Canadian dollar, you don't probably need to worry too much about that. But Fed Chair Powell, and there's a jobs report, 8 a.m. on Wednesday. Okay, March 9th, Thursday. Nothing really to be concerned about. Now, if you do go over here, yes, this says, you got unemployment claims, Challenger jobs cut, FOMC, Barr speaks. These FOMC members in different parts of the country speaking do not have a tendency to move the market much at all. In fact, I completely ignore this yellow folder. Okay. Friday, you don't generally have too much news on Fridays in the US. You do, and sometimes these things will shift based on holidays. So unemployment rate Canada, yes, red folder, not too important for us, but non-farm employment change and unemployment rate, red folder in the US, 6:30 a.m. You might see some movement. That is not 6:30 a.m. for some reason. If you look up here at these time options, even though this was 2 hours back a minute ago when I was talking to you guys, this switched to my Arizona time. So yeah, there's never news at 6:30 a.m. So this is 8:30 news on Friday, March 10th. I don't know why this synced, because it wasn't synced before. Let's put this on Eastern. Yeah, there you go. Great. Thank you. Now take me back. Okay, go to the calendar. Here we go. And then let's see, let's check the date real quick. There are other sites you can use besides Forex Factory. The point is, you want to know. So the 10th is you want to know what days you have news. Now it is switched to a weekly. So there's settings in here. Going back to Friday the 10th, there you go, 8:30 news on non-farm payroll and unemployment. This does move your futures market. Okay. So red folders, reminder, red folders on forexfactory.com. Okay, if you want to use another one, use another one. I'll put that note in here. Put it in caps. Look for red folders. Okay, on forexfactory.com, and just make sure your whatever time your computer's on is you know that the time on your computer is set to either New York time if you want it. Like I said, I like everything on New York time. You don't need to do that. You just need to know when the news is coming. That's it. Okay. Now, does the news actually matter? I mean, if you're technical trading a 1 minute chart, the news doesn't matter. It just matters that there is news. Like, were their jobs lost? Did they report more jobs? Did they report less jobs? You know, they're going to revise that number a few days later. You know, is the amount, do those numbers, are those numbers relevant? Yeah, they're relevant somewhere. You're not going to find them to be too relevant in you day trading a 1 minute or a 5 minute chart. What you need to know is you're probably going to get some swings, or you're going to get a lot of action based on that news, which goes down to the next thing. Best way to trade the news. The best way to trade the news is not to trade the news. Not that you can't trade it at all, but the best way to trade the news is probably not to be in a position. Okay. Even, you know, right now, you could put an order in here, down here. Okay. I have a level. Like, can I put an order in here? And if news was about to come out, you know, there's a good chance that price rips down there, taps that before you even had a moment before you could even see it. It went down and put you in a position and took you out 10 points later, you know, 51 to 61. And it literally just went boom, boom. The issue with that is it could also rip right through your level, because news will definitely push price. You really just don't trade news. Give it 2 minutes to settle. Let the news, if it's 8:30 news, let the news kick the chart around. The smaller time frame you're on, the more you'll see this, the more you'll go crazy. Let it go for like 2 minutes. Let it settle. After a few minutes, and it could even be more than 2 minutes, depends on what you're, you know, what parameters you're looking for to take a trade. But be out like 2 minutes before, and don't get into like 2 minutes after. And if anybody's trading on a combine or trading for a proprietary firm trying to get funded, some of them have rules around trading the news. Like, you have to be out 2 minutes before, 2 minutes after. So that's my advice on what to do about the news. Okay. You want to obtain more specific, I'm looking down here at my notes, obtain more specific insight on specific news events. Depends on how much you want to geek out on it. You know, go back and track some news. You know, there's 100 ways to make money in the market. You can go back and see, you know, what the non-farm payroll does when prices in a daily uptrend, and we're trading inside gap down on a Wednesday. You'd have to gather a lot of information to see how that news is affecting the market you're trading. And some people have a propensity to do that. Some people are able to do that and get lost in it and love it. And I don't think it's necessary for something you guys need to be learning as beginners in trading futures. I think your best thing for you to do with the news, just stay away from it. Don't trade a few minutes before and after the news. Let price settle. That is my advice there. All right. I'm gonna wrap this up, and if you have any questions, fire away. Or I see something in the chat. Hold on. Get this off screen a second. Where is the chat? There's the chat. 11:30 your time. All right. Yeah, Doc, I can't even see your question before that. I don't know if maybe you were muted.
No, I was just saying my bad for being late. When it said 11:30, I thought it meant like 11:30 your time.
Did it say 11:30 in the email or 11:30 on the invite?
No. The invite was correct. I was just in my head. I was thinking about it wrong. My bad.
Oh, yeah. I try to do. I do everything market related. I do on New York market hours. So, you got any questions while you're on there?
No, not right now. I have to watch the playback, I guess, because I missed some of it.
Okay. Yeah. I mean that. Let me just kill this recording real quick.
Yeah, Mark.